Hello guys, hope everyone is well, and we'll just jump straight into our analysis. This week we had a live Zoom session yesterday which went on well. We covered a few pairs that we were taking, and so far they've gone as planned. I'll look at USDCAD, show you how we covered that. Then Ken will come in and show you the rest of his analysis, which we are both running profitably this week. So on USDCAD, we had this is the weekly chart. Something I was looking at is this yellow line that you can see here, 1.3550 level, which was acting as support, a resistance. As you can see here, it was resistance at this level. If I can mark that for you, as you can see, it was resistance here. It came resistance here. We had a breakout here, had a retest at this level, and then market came and had a retest at this level. When market opened with a gap at this time, it also acted as support. And then this week, market has been failing to close. Not this week, but for the past 5 weeks or so, market has been failing to close up above this level. But this week we're getting that strong momentum to the downside because we're getting a third bounce from the trend line, which I'll show you on the daily chart. But if this week closes below this level, then I'll be really bearish on USDCAD up until 1.330 level at least. So if you go down to the daily chart, we can see we have this channel formation. I have an Elliott analysis that I'm paying attention to. As you can see, we had that first bounce. We had this first bounce here, second bounce, and we got that third bounce, which on my Elliott count was 1, 2, 3, 4. Currently at 4, bouncing off 38.2 Fibonacci, and now I'm aiming for the market at least to go further down to 1.33, and then if we get a strong break below that level, I'll be pushing to trade the market further low. So if you look on the daily, we're seeing that we've been having multiple rejections to the upside. I had a short entry at this level yesterday after seeing last week's momentum slowing down on Friday. So if you go down to the 4-hour chart, I'm having a controversial analysis at this level, and I'm looking for market at least to see. I have this sort of triangular formation which we are forming, that A, B, C, D, E. So I'm paying much attention to this. At the same time, it can be inverse this. So let me show you. We can be having this A, B, C. This sort of acted as D, and this could have been E, and now we're expecting market to shoot further down. So currently I'm running this analysis as I'm looking for further shorts, but I'm also keeping in mind that the market can have that possibility of respecting this channel formation and maybe even shoot further up from this point, and we get that move to the upside. So currently my trades are basically at break even. I got my entry yesterday when we were having the Zoom session around this level, 3580 level. Had my stops above this previous high at this point, and I'm looking for market to go all the way to 1.3350. But I had target over here that I've taken a few profits off the market where we are currently having support. I was sharing with the subscribers today morning, and that's basically what I'm looking at this. If you go down to the 1-hour chart, further breakdown analysis, which is looking at further shorts for market to go further down, I have this. So basically market always moving in channel. One of our top analysts here at Financial Hub always uses this channel formation, so he's always looking at channels, and I also respect the channels. As you can see, we had 61.8 Fibonacci retracement, and I'm looking for this market to respect this channel to go further down, but I'm very open if the market gets momentum to the upside. So that's all I have for you guys this week. Maybe we might have a retracement correction, maybe to 1.3550 before we go further down, but if we get a break of support, then I'll be very bearish on this one, and maybe even scale into my trades for another intraday trade, with my long-term perspective being 1.3300 level or 1.3350 level. So that's all I have for you guys, and Ken will take it over from here.
So hi guys, so Caleb talked about dollar CAD, so I'm going to do an analysis on gold, oil, and probably I'll look at Dow Jones, which is an index. So along the way, if I encounter any other pair that I can do, probably we'll cover it in the Zoom session tomorrow. So to start off, I look at gold, which is a pair that we looked at in the Zoom session, which was yesterday. And these Zoom sessions are free, so if you're interested in joining them, just look for how you can get our link by either looking at our website for our contact, so you can join our WhatsApp group. So anyway, so gold on a daily chart perspective, what's happening and where do you expect gold to keep on going? So if you look at gold from a big picture perspective, you discover that gold is in a bullish trend, and gold recently had a consolidation for about 2 months, but recently broke out and we've been moving higher ever since. Last week, however, we never had any bullish momentum, so markets are primarily consolidating between the around the 1790 zone and the 1818 mark, so around 1820. And what happened today is we have gotten some huge bullish momentum threatening to close above R2. I will not be quick to tell you that we will get to 1850. I will, however, wait for today's close. So today's close is really crucial. If we get a shooting star close, I will turn bearish and expect this market to collapse all the way to 1750. But if we get a good close above R2, then you can expect this market to keep on rallying all the way to 1850 level, which is the next upside target. So that's what I'm looking for on gold. On the 4-hour chart, maybe we can tap into 1830. So gold will probably tap into 1830 today, this level, but you could just get a spike and then we'll get a correction lower, or we could get a breakout and they get the extended move higher. So this is what I'm watching. I'm looking for gold now. So currently I'm watching it for a short position at 1830. I expect that maybe we'll get a retracement from 1830, especially in the US session. So as I do this, we are 2 hours into London trading, so probably at 4:30 I'll be watching again to see if we have gotten this move higher, and then I'll watch for this candlestick close, because I expect that markets could spike this level 27.2 and it could start the long correction which I've been waiting for a long time, or we could break past this level and we could rally all the way to 1850. So there are those two scenarios that I'm watching. A better short obviously will come in at 1850, but I wouldn't want to miss a short if we got a signal at this point. So that's what I'm looking for on gold, and I won't go to the lower time frames because I don't think there is much that is different from what I have on these higher time frames. So that's my outlook on gold, and now I'll jump on to the next pair. So next I'll look at oil. Yesterday also on the Zoom session we looked at oil and we pointed out for a probable bull move, and you can see currently the markets are up about 3%, so the bull move played out really well. So what am I looking for? On oil, long term, I'm looking for at least the $43 mark to be gotten to, probably before Thursday or at least before tomorrow's US session. We could get this huge extended move to 43. Then I'll watch the behavior of price action at this level before deciding whether we'll get to R3 or we'll get a correction from this level lower. I'm currently holding a bull position which I came in early yesterday, the beginning of London session, and immediately we got this move. I added into my position expecting that this market will at least rally higher all the way to the 42.5 mark. So you can see the bullish move about 250 pips if we get to the target, but currently we are up about 160 pips, so about 70 pips remaining before we get to our target. And now it's time, I think, to start collecting your profit, but we could still get an extended move past this level and even to $43 mark. But for me, I trade a system, so I don't want to be in the market hoping for something to happen. I want to be in the market when the signal tells me to be in and to be out, and I'm supposed to be out. So looking at fibs, you get that we're at the 27.2 mark, and now we're probably looking for 61.8. Yeah, you can see 61.8 aligning perfectly with 43, aligning again with this top line. So for me, I'm watching for the $43 mark for shorts, but for me, I'll start liquidating my positions at the 42.5 mark, which is my upside target. So if you never executed a long on this one back then, I don't think there's any chance for you to jump on longs. The better idea is for you to wait for price and watch the behavior at 43. If you get a bullish signal, then don't jump in, wait for the move to keep on moving higher. If you get a bearish signal, you can jump in short and expect a move lower. So that's my outlook on oil. Again, for this one, I won't go to the lower time frames, because again, the same thing that I have on the higher time frames is the same thing playing out on these time frames. So you see I have a channel here, and we had this huge extended move, and now it looks like we'll be getting a correction, but basically the same idea. So I'm watching. You can see my target actually is 42.3, about 20 pips, about 70 pips remaining from where we currently are, 41.8 to 42.5, so about 70 pips remaining, and that's a big number if you're trading size. So I'll just keep on holding expecting markets to keep on moving higher, at least to my target. So that's my outlook on oil. We'll wait for shorts at $43 mark. Behavior of price will guide us, and probably this is a trade for tomorrow. Again, I don't think this is a trade that you can jump on today. You'll have to wait for tomorrow, then you can decide what to do with the markets. So that's my outlook on oil, and now I'll go down to the next pair that I'll be looking at. So the last pair that I'll be looking at, actually this is not a pair, it's an index. So I'll look at Dow Jones. Last week we made some good money shorting this one, and this week I've also so far made some good money buying it, but we are watching different things. So I'll share what I'm watching, because I think the buy trade is over, but I also shared it via the Zoom session that we had yesterday. So this is Dow Jones, the 30 best American companies weighted together. So what are we looking for? So one, I'm watching this level, the 27,200 level. We can expect markets to keep on moving higher all the way to this point, and then we'll get a quick move lower. We could even probably get some sort of a fake out breaking this level, but then we won't get it, and then we'll get a move lower. So first level that you're watching is 27,200. But if I come down to the 4-hour chart, then I have something different. So on the 4-hour chart, this is what I'm watching. You can see we had this drop, and since we had a drop, we never had a pullback. So I sort of expected a pullback to come in, and I expected the pullback to move all the way to the 78.6 fib retracement, because I think markets now have deep pullbacks. 61.8 or 78.6 is the accurate pullback, the one that you can rely on. So I'll be watching the behavior of price at this level, 27,000 mark. For the bullish position I have, I want to liquidate at that level. So if I check for the 1 hour price action here, you discover that we're looking for 27,000, 27,050, which is the next upside target. So this is the next upside target on this index. So if you get to 27,000, I'll be watching the behavior of price. In the event that you get bearish price action, then I'll be looking for shorts all the way to S2, so around 25,800, which is in confluence again with this third trend line bounce, and this is a big short, about 1,200 pips. And if you look at fibs, if you try and extrapolate to look at the fibs, then you discover that this was the first one, which got to this level 27,000. If you get to this level, 61.8 aligns perfectly with 26,000, 1,000 pip drop. But again, I think this is also a trade for tomorrow, or actually later today during the yes session, because we're only 80 pips from where we currently are to our targets. So as we transition to US today, I'll be keen on markets. I'll be looking at what will be happening, and then I'll try and look at how I can position myself, because if I look at the 15-minute chart on this one, discover that 27,000 aligns perfectly with our one. So if we can get here before the US session, then probably we'll get many sell-off, a huge sell-off coming in, many sellers prompting a huge sell-off from this level, taking us lower. So that's what I'm watching on the Dow, and now I'll move on to the next. I won't move on to any other pair. So that's it from us, and we hope to see you tomorrow on the Zoom session. So we normally have Zoom sessions which we do live trading on Mondays, Wednesdays and Fridays. So if you want to jump in and see us execute live trades, cover losses, cover wins, and cover setups and learn something, then you can contact us for the link, and we'll also try to make sure you get the link and join us. So that's it. Hope to see you guys next time. Economic recession and a bear market.
This is the time we tell you people to sit tight and watch the markets closely.